Star stock picker Ron Barron of Barron Capital said recently in an interview that he predicts Tesla stock will hit $1 trillion in sales by 2030. While this may seem far-fetched, investors familiar with the brand should see the prediction as no surprise. Last year, Tesla managed to hit a market capitalization of $1 trillion, even though it was short-lived. Would Tesla be able to achieve it once again, just as Ron Barron said? Just how would they achieve this? What are other analysts' predictions? Keep watching to find out. According to billionaire investor Ron Barron, Tesla has the ability to generate at least $1 trillion in sales in 2030 and then continue to grow from there. Tesla Inc.'s shares have fallen in 2022, despite its record-breaking fourth-quarter earnings last year, seemingly because of mounting concerns over recent product recalls and the company's recent capital-intensive facility launches in Berlin and Shanghai. However, as the geopolitical tensions resulting from the Russia-Ukraine conflict play out in the financial markets, some analysts believe Tesla will benefit as oil prices rise and electric vehicle manufacturers emerge as a more appealing option than traditional internal combustion engine manufacturers, sealing a bright future for Tesla despite current circumstances. Tesla Incorporated's market capitalization, which had surged to $1 trillion in October 2021, slipped below that threshold afterward, continuing an unpredictable downward trend that started a few months ago. Tesla's share price performance came as an unpleasant shock for investors betting on an electric vehicle future, controlled by the firm after turbocharged rapid gains for the stock. They may be wondering if Tesla can recover and become a trillion-dollar corporation once more. Ron Barron, the founder of the investment management firm Barron Capital, certainly thinks so. He's well known for his earlier success with Tesla, making millions for his clients due to his predictions of the company's success coming to fruition. Despite the stock's volatility and Tesla's CEO Elon Musk's self-inflicted wounds, Barron said his faith in the firm was never undermined in a recent interview. If it were up to him, he stated his firm would buy more of the company's stock as he personally has over 1 million Tesla shares. According to certain experts, Tesla is soon to outdo the results of their very impressive fourth quarter of 2021. Model Y automobiles are planned to be produced in Tesla's Austin, Texas plant by the end of the first quarter of this year. According to Wedbush analyst Daniel Ives, production commencement in Austin and Berlin will be essential to meeting demand. By the end of the year, Ives anticipates capacity to have doubled to 2 million, which would set Tesla on a trajectory to achieving Barron's predictions. Credit Suisse analysts Dan Levy and Trevor Young upgraded Tesla to outperform, with a 12-month price target of $1,400 earlier this year. Tesla's advantage over other original equipment manufacturers and ability to maintain a high profit, despite supply chain difficulties and plants operating at a lower capacity, justified the upgrade. Tesla's stock prices have been under pressure for some time. Many analysts believe the stock's price is overvalued. The exercise of stock options by Tesla's CEO and co-founder Elon Musk is another factor many believe is contributing to the company's recent decline. According to analysts, the bulk selling has added to the stock's downward pressure. Musk's most recent sale took place on December 13th, when he sold 934,091 shares for $906.5 million. After selling $9.85 billion worth of shares in November, he had sold $2.87 billion worth of stock so far in December of last year. It is worth noting that during the pandemic, the stock's fundamentals may have shifted in equity markets, but the company's business grew stronger. In Austin and Berlin, it opened additional production plants. The Shanghai plant, which opened in January 2020, outperformed the Fremont factory in terms of manufacturing capacity and served as a hub for automobile export to Europe. In addition, the business made strides in its self-driving research and produced novel battery chemistry. When looking at the timeline of production and sales, a pattern immediately emerges. In September 2017, global sales surpassed 2,500 units, and Tesla produced its 300,000th vehicle in February 2018. In December 2018, Tesla's global sales surpassed 500,000 units. Tesla's global vehicle sales climbed by 50% in 2019, from 245,240 to 367,849 vehicles. The business created its 1 millionth electric vehicle on March 9, 2020. Tesla sold its 2 millionth electric vehicle in September 2021, making it the first automaker to do so. Tesla's global sales since 2012 have exceeded 2.3 million units as of the end of 2021. It's clear that Tesla is constantly reaching new milestones and outpacing itself. But will it have the capacity to hit $1 trillion in sales by 2030? Only time will tell. After joining the S&P 500 in 2021, Tesla's spectacular rise made it a trillion-dollar corporation and one of the most profitable financial plays. The corporation was able to raise money thanks to that value, which was used to sell fresh stock and trade options. It's been speculated that this helped pave the way for the company's capital-intensive locations in Austin and Berlin. Future growth, on the other hand, may be dependent on Tesla's fundamentals, its ability to overcome supply chain challenges, handle the issue of affordability in the EV market, and maintain its lead as the competition heats up. So far, the company seems to be doing a good job. The chip scarcity problem that reduced the production of several automakers might not be going away anytime soon, but Tesla appears to have it under control. Despite being under pressure to meet sales goals while dealing with widespread semiconductor shortages, it recently came out that Tesla decided to remove one of the two electronic control units that are normally included in the steering racks from the made-in-China Model 3 and Model Y cars. However, Tesla did not reveal the exclusion, which has already impacted tens of thousands of vehicles being delivered to customers in China, Australia, the United Kingdom, Germany, and other parts of Europe. The exclusion implies that Tesla had to make changes in addition to those previously stated to keep its factories open. We feel that if the organization had followed this course of action, they have a plan in place to deal with any concerns that might arise in the future. On the issue of affordability, Elon Musk had told Tesla employees previously that the company's previously promised $25,000 electric car will be available in 2023. Given the usual price range of a Tesla car, this is quite affordable. He made it clear that Tesla's new battery cell and battery manufacturing efforts, which might cut battery costs by more than half, are responsible for the new pricing point. The $25,000 Tesla, dubbed the Model 2, has been compared to a new electric hatchback that Tesla plans to manufacture and export globally from its gigafactory Shanghai in China. Musk hinted that it might not even have a steering wheel. On one hand, there's the battery technology that we believe will make Tesla much more valuable once they are perfected. Also, there's the full self-driving technology that could be revolutionary. When you combine both elements into one car and make it relatively affordable, only one thing is certain: massive sales. With the launch of this new model, as well as the Cybertruck, there's no doubt that sales will reach a new high. And in 7 years, $1 trillion in sales starts to look more feasible. Ron Barron said that his faith in Tesla originates not only from the company's financial model, but also from its approach to innovation. They're innovating at the speed of light, Barron said. They're doing the same thing with automobiles, and they're doing it with space as well. And he's completely correct. What distinguishes Tesla from the competition? We say it's Tesla's willingness to consistently innovate amongst other factors. Nonetheless, Tesla's competitors are putting in long hours in the quest for an electric vehicle. While Tesla has said that there would be no new models in 2022 and that Cybertruck is currently under wraps owing to cost concerns and the rolling out of new features, Ford Motor Company aims to release its electric truck, the F-150 Lightning, this year, and GM's Silverado in the second quarter of 2023. Ron Barron has declared severally that he's for the long run when it comes to this stock, and maintains his ground that Tesla will once more climb back to a market capitalization of $1 trillion and will be making over $1 trillion in sales by 2030. Even if he didn't make money off dividends and such, Barron says he's fine investing in Tesla and Musk because of what he's doing for the globe in terms of zero emission and a positive environmental impact. Will Tesla hit $1 trillion sales by 2030? Will they become $1 trillion company once more? Comment down below.